Have you been growing weary and tired waiting for the price of silver, the price of gold, platinum to break out, to go to where it needs to be, where it should be, the true value of silver, gold, and platinum? Well, you're not alone. Hey, back in the 70's, we had unbelievable returns on the silver price and the gold price. Mike Maloney says that the gold price went from a low during the 70's of $35 an ounce, thank you, Ron McAdams, all the way up to $875 per ounce. That's a 25 times increase. Mike Maloney also says that silver hit a low of $1.27 per ounce in the 70's. That was the lowest that it hit. And he claims the highest that it hit was $52.50, over a 41 times increase. Well, that's great. This isn't the 1970's now, is it? But do we have clues? Do we have indications right now, right in front of us, right now, as you're here with me in the basement, clues that we could be heading into a similar environment where we could see extraordinary gains? We're going to look at the fact, are the Eastern countries gaining control of the precious metals markets? That could be super critical. We've got several analysts, including Gareth Soloway, who's very bullish on gold in particular. He's a top analyst. I've got some info from Kitco where he looks at both silver and gold and offers some keen insights. We're going to cover that. Have gold and silver already crashed? We touched on that this morning, but we're going to touch on that again. Are the prices right now that we have for gold, silver, and platinum, are those the crash level prices? And do we have nowhere to go but up from here? That's good news as well. And we got a little doom. We're going to talk about what's going on in the economy, right? There's more and more every time we turn around, which is going to lend support to the precious metals. When the economy weakens, guys, when the other people begin to wake up to what is going on out there, you know, I know, we already know, but as they start to wake up, it's going to spell huge support for the silver price and the gold price. And of course, in nominal dollar unicorn fart dust terms, it'll be higher prices as well. We'll be all happy. We'll have a party here in the basement. You know it, and you'll be invited, right? Don't forget that bear, right? Holding that box from our sponsor, Pimbex. Huh? Why is he blindfolded? Because when gold hits $2,500, that's the gold bear responsible for the bear market in gold. We're going to take that blindfold off, and you're going to be here to enjoy it while it happens. But what's the biggest story? So we're going to talk about all these factors that can come together, a confluence, right? Supportive for the silver price and the gold price. But what's the biggest story right now? What do you think when I say the biggest story that will impact not only the U.S. economy, hint, hint, but the entire world geopolitical situation, and absolutely will have a major impact going forward? I'm not saying Monday, right? But on Monday 4 months from now, on Monday 4 years from now, and on Monday, 14 years from now, this will have a major impact, and the Western media is not even recognizing that it's gone on, and we need to learn about it. So let's start there, okay? And that is the BRICS expansion, but specifically Saudi Arabia deciding to join the BRICS. Guys, it's hardly being covered in the media. And look, I don't know about you, but me, 2 years ago, if you'd asked me about the petrodollar, I probably would have looked at you cross-eyed. Yeah, I'd heard of it because I'd studied silver and gold and the subject would come up, but it wasn't anything that I really understood. But why is the petrodollar so important to the U.S. economy and to the price of precious metals? Because in 1974, when Richard Nixon, here we'll do a quick lesson, went to Saudi Arabia and told them you have one of two choices. Either you only sell oil in US dollars, or you may not like option B. They decided to go with option A, which was to sell oil in US dollars. And all the Arab countries joined in. All the OPEC countries initially joined in and only sold gold in US dollars. And that afforded the United States a huge privilege, right? World reserve currency, hegemony, I don't know, hegemony, I don't know. It allowed the United States to be the world power, for the dollar to be the world's reserve currency, because oil is the lifeblood of the world economy. And I didn't really realize all of this until just a couple years ago. But oil is the blood of the U. Like we have blood in our bodies, oil is the blood of the world economy. And when the blood of the world economy was essentially only traded in dollars, that gave the United States a huge advantage. That meant that all those dollars that were made had to go somewhere. And you know where a lot of them went? They bought U.S. treasuries. They allowed the United States government to spend way beyond their means. To a certain degree, it allowed U.S. citizens to live beyond their means, although we weren't really consciously making that decision for ourselves. But guys, things are changing. This is the biggest story of, I don't know, the year, the decade, maybe the century. Saudi Arabia has announced that they are going to join BRICS. Not only Saudi Arabia, but the United Arab Emirates and Iran. We can't underestimate the impact that that's going to have on our lives and our children's lives going forward. The dollar, this is a continuation of the process of de-dollarization. We didn't get the gold-backed currency that even I talked about 4 or 5 weeks ago, because the news then was that we were going to get a gold-backed currency. So I was wrong. But according to the Russian embassy in Zimbabwe, maybe we should check the sources a little better next time. Nonetheless, in other news reports, everyone jumped on this story that we were going to get a gold-backed currency. That didn't happen. We didn't even get the announcement of a shared currency amongst the BRICS countries. But really, to a certain degree, if you had told me before this went on that we would get an announcement that Saudi Arabia was joining BRICS, it's huge. It's a move away from the dollar. It makes the dollar less valuable, less powerful. Again, you aren't going to notice any huge change on Monday. Some people are saying over the weekend that people are processing everything now that's going on. What Jerome Powell said at the Jackson Hole Summit, right? We've already talked about that. People are starting to realize that maybe he was actually a little more dovish than they initially thought. We've got Saudi Arabia news with BRICS. That's de-dollarization. It's happening, and it's going to provide long-term support to the price of gold and the price of silver. Absolutely. Again, we don't know that it's going to happen Monday, but it will happen. All right, let's dig into another interesting phenomena that's going on right now. And this comes from an incredible piece of research from Gainesville Coins. Let me read this to you. Bear with me. Okay, here we go. The title is "The West is Losing Control Over the Gold Price." This kind of fits in with what we heard about Saudi Arabia, the BRICS countries, correct? Correct me if I'm wrong. Again, this is from Gainesville Coins, and it's written by John Niewenhuis. Let me read a couple of these paragraphs to you, and I want you to let this kind of sink in. An important change has unfolded in the global gold market. The East has been driving up the gold price predominantly in late 2022 and the first months of 2023. The East is driving up the gold price, breaking the West's long-standing pricing power. Until recently, Western institutional money, that's United States, Europe, Australia, was driving the price of gold in wholesale markets such as London, the LBMA in London, England, mainly based on real interest rates. Gold was bought when real rates fell and vice versa. And you know what real interest rates are, right? That's the extent to which bond yields, bond interest rates are higher than the inflation rate. Okay, so if the bond is paying 5% and inflation's 3%, we have 2% real interest rates, which is kind of the case right now. So gold should be down. Gold should be down. Okay, however, However, from late 2022 until June of 2023, gold was up 17%, while real rates were more or less flat, and Western institutions were net sellers. So Western institutions were selling gold. Most likely, Eastern central banks and Turkish and Chinese private demand lifted the price of gold. Now, let's skip here to where he kind of sums this whole thing up, and it's very interesting. Jean says, next, the most logical explanation for gold's recent behavior is a combination of buying by central banks from emerging markets and strong private demand from Turkey and China. It's possible that the World Gold Council's estimates of covert central bank buying are too low. Given these estimates were falling during the price spike at the end of 2022 and at the beginning of 2023. There's a big gold nugget hidden in here, guys. We're going to get to it. As some of you might have noticed, the U.S. dollar gold price has been declining in the last months, right? We know that. Of the period of our investigation. And London was still a net exporter. London was still shipping out gold. Perhaps the West will regain control over the price again. Perhaps. I don't expect the gold price to fall to levels previously suggested by the rates model, meaning with the real interest rates up, gold should be lower, but it's not. Central bank buying is likely to stay strong. We still believe that the official sector will remain a sizable bullion buyer for the foreseeable future, as factors that encouraged reserve managers to add gold reserves in recent years are expected to persist. That was from Metals Focus. Here, we will have to wait and see if the East is able to further push up the price of gold. And when we're talking, thank you, Sharon. Oh, yeah, I got to ring the bell. Thank you. That's 10 rings of the bell, 1 ring for each 10 thumbs up. Thank you for reminding me, Sharon, and thank you for the super chat. We will have to wait and see if the East is able to further push up the price of gold and weaken the West's control over the price. If so, gold will become less of a dollar derivative. Remember that. Gold will become less of a dollar derivative and take more center stage in the international monetary system. Any developments will be reported on these pages accordingly. Guys, I'm going to repeat that for you. You may want to come back and watch the replay of this because this is key. Gold will become less of a dollar derivative and take more center stage in the international monetary system. That means, right, when the dollar goes up, gold goes down. That means gold is a dollar derivative. That is fading away as the Eastern countries are taking control of the precious metals markets. We hear about the Shanghai Cooperation Organization, all these countries all over the Asian continents. We know what Russia's doing with the Moscow World Standard, setting up their own market to compete directly with the LBMA, to compete with the COMEX. We know they have the Shanghai Gold Exchange. The East is taking over the precious metals market. So what this article suggests is that we could continue to see a trend where the dollar decouples. It has an inverse and opposite relationship with the dollar. Gold and the dollar move in opposite directions. The dollar goes up, whatever that means. We have already talked about that. Gold goes down and vice versa. When the dollar goes down, that's generally supportive to gold. That could be breaking. And gold could take more of a center stage, and we're talking about silver, we're talking about platinum, in the international monetary system. That means a recognition to what's always been true, that gold and silver and platinum, the precious metals, are money. right? The dollar is a derivative of gold, you could say, right? I mean, gold is the base. We know what John Exter, right, the former Federal Reserve economist, wrote for decades, that gold and silver are the money. They are the real money. And what this article points out is something that could be groundbreaking for precious metals investors. Could be, okay, right? The gold is re-recognized as the base of the world monetary system. We talked about gold backing this BRICS currency, right? We know that didn't happen, but we also had some very smart people say they don't need a shared currency. They can just use gold. And wouldn't that kind of make, if we think about what's going on with China buying gold, India buying gold, all these central banks buying gold, doesn't that kind of sort of make sense? And maybe, just maybe, I don't want to be too pushy with you here, but maybe, just maybe, if we crack open our history books, right, and we look back 1,000 years, or we crack it open a little further, look back 2,000 years, we see that gold over thousands of years has been the base of monetary systems. We've had derivatives, right? The British had derivatives, the Dutch, the Spanish, the Roman Empire, the Germans, the United States. After 1971, when Nixon took us off the gold standard, I won't go down that road, I promise you. So I thought that article really pulled together what could be going on. It's not gold becoming something. That's the key to remember, guys. It's not gold becoming something. No. What it is a re-recognition, a reclaiming, right, of what always has been the case. That's the big key to remember as we talk about gold and talk about silver, and we talk about incredible returns that occurred during the 1970s, right? And let's get back onto that subject right now. Let's talk about a little bit more about what this guy, I talked about him this morning, Jared Dillian. Okay, he has one of those real fancy weekly newsletters, and he's a super smart guy. He's one of the he's not a Bank of America. Thank you, Julie. Wow. We're going to touch on later. We have such a growing number of lady stackers, women coming into the precious metals field, and it is awesome. So, Julie, thank you for that super chat. Very much appreciated. Now I hit the wrong button on the teleprompter here. There were a couple more things that this Jared Dillian said about gold, okay? Oh boy. Hold on, I screwed this up really good. Okay. Don't forget, he brought up a very good point about gold. Gold has 3 times. 3. 1, 2, 3. And when I talk about gold, I'm talking about silver, I'm talking about platinum. They're all related. They're like cousins, okay? But gold 3 times has tried to break through to new highs, okay? He said, you're not supposed to have triple tops. Quadruple tops almost never happen, meaning it breaks through. We already talked about when it goes to 2,100, it's going to 2,600. That's my prediction for next year. Gold, $2,600. I know I'm a little higher than a lot of people, but I believe that absolutely to be the case. We'll see if I'm proved right or proved wrong. Hello, Mary Radcliffe. We're going to open your present here in just a few minutes, guys. I have a package from Mary, and I'm very excited, very excited to open it. Hold on, let me get a quick drink of coffee. You can take a little break. I'm not going anywhere. Jared, also brought up a very interesting point about gold. Gold spends a lot of time going down, right? Like the last 2 months, we've experienced a slow kind of fade down in the gold price and the silver price and the platinum price. But it goes up much more quickly. And the big kicker is, lately when it goes up, it's going up more than it's gone down. Okay, so I know it's painful. And he even said that. He said, so people are getting frustrated, right? So right now, we're on the cusp. I feel it. I feel it in the next month. I could definitely be wrong, but I have a strong feeling that a month from now, right, what'll that be? The end of September, roughly, that we're going to be sitting with a much, much different price for gold, silver, and platinum. I'm not going to make any crazy predictions, but when I say much different, I mean higher. Okay. Will we? Could we? Could we be gearing up for an end of the year run for record gold prices 1 month from now when you're here in the basement with me again? I want you to come back. It's important because you are there's no Ron's basement without you, right? There's only one you. And the fact that you're here is a huge honor, and we're all together and we love silver and gold. So, I want you to come back. I'd really like it if you could subscribe to the channel. That would help. And thumbs up. Please, thumbs up. If you give it a thumbs up, that's free, and it helps get the word out to more people. A month from now, we're going to be looking at a much, much different silver price. I'm convinced of it. Gold price, I'm convinced of it. Let me know in the comments if you think. Hello, Neil from Neil Hahn's Dynasty. Hello, Susie from Susie's House. Hello, Mary Radcliffe. If you think a month from now, we're going to have higher silver, gold, and platinum prices, type the number 3. If you think we're going to have lower silver, gold, and platinum prices, type the number 1. I want to see and get a feel for what the community thinks. We got a lot of 3s. Thumbs up are huge. Yes, I'm very sensitive. Susie will tell you I'm a sensitive Sally. So, we got a 1. We got some 3s. Mostly 3s. Mostly optimism surrounding. Now, what do you think Gareth Soloway says? You know who Gareth Soloway is? He's another respected trader, independent, right? He's an independent guy. He's not allied with any bank. He doesn't have anybody telling him what he has to say. Let me just read to you what he says about silver. This comes from our friends at Kitco, okay? Bear with me. Okay, here it is. It says metals on the move. We like that. Gold, silver, uranium, and copper. Epic chart analysis and explosive potential moves. Let's just skip to the silver section. It says silver, similar to gold, presents a captivating chart story. The metal is ensnared within a macro downward sloping resistance line and a macro upward sloping support line. Sorry, I'm having some voice issues, guys. Creating yet another triangular pattern within this structure. A noteworthy support line has emerged just above the $22 mark, transforming from resistance to support. He says, in the present moment, silver finds itself testing both support lines concurrently, yielding a substantial bounce in response, a bounce. Envisioning the path ahead, there's a potential journey. Thank you, Shadow Work, for the super chat, my friend. Thank you. Towards resistance at approximately 25.50. This showcases the intricate interplay of support, resistance, and market sentiment. So what I hear in that, and I'd be curious what you make of that, but what I hear in that is that silver's in kind of a state of flux right now, a state of flux. And it could get pushed real high, pushed real low. Now, that's just looking at the charts. We know the other factors at play, the geopolitical factors, the supply-demand factors, the fact that if we have any kind of crisis that emerges, do you think we'll have another crisis? I mean, do you think it's possible that there's going to be some kind of crisis that pops up here in the next, let's say 6 months or 1 year? Think about the next 6 months to 1 year. Do you think we'll have any kind of crisis that comes along? I do, right? I know that the economy is fragile, sensitive. We've talked about that. extensively, we know the banking system is under huge stress. Our friend Jared Dillian said that. He said, the Fed's not talking about the banking system right now publicly, but behind the scenes, they are really concerned about what's going on right now in the banking system. So we start to pull all this information together, right? It's an interesting scenario that's unfolding. Let me read, I want to read a couple comments to you that came from the community. Okay? This one, I thought this was great. This is from Wyant Beatty. He says, Ron, I believe gold will be $2,400 in the early months of next year and $3,000 by the fall of 2024. Now, why do we want to listen to this guy? Well, I'll tell you why we want to listen to this guy. He says, I may be wrong. So he's admitting some humility. That's a good sign. But I base this on 50 years of stacking and studying the market of gold and silver. In the time of my stacking, gold has increased many times. In the time of my stacking, gold has increased many times over. It doesn't seem that long ago to me when gold was $300 per ounce. Sorry, guys, I'm having voice issues today, but 50 years of experience trading and studying. He's calling for our friend Wyant Beatty, right? $2,400 gold in the early months of next year and $3,000 gold by next year. We'll see if he's right, but I thought that was an interesting comment from one of you, from one of the viewers, right? This is your channel. Keep your ideas. Keep your comments coming. We also need to recognize somebody. Okay? Hold on here. Betty the Stacker. Do you guys know who Betty the Stacker is? Right? She's another one of the lady stackers. Don't forget, June 24th is International Women's Stacking Day, as designated by the board of directors of Ron's Basement. But let me read this to you. This came from a regular viewer, a subscriber, James Berryhill. He said, hey, Ron, my girlfriend Betty made her first silver purchase just a few minutes ago at ABC Coin in Cincinnati, Ohio. So if we can give Big Ron's Basement welcome to the club on tomorrow's live stream. You got it, James. Betty, good job. Welcome to the world of stacking, okay? It's a fun place to be. We have more and more women who are joining the stacking community. That's just a fact, okay? Now, we touched on it this morning, but we're going to touch on it again because it's good news for silver. We talked about what Jared Dillian said. We talked about what Gareth Soloway said. We talked about the fact that the East is gaining control, and we have the growing BRICS alliance gaining control of the silver, gold, and precious metals market, right? What if, let's just revisit this. What if the prices that we're at right now for silver, right now for gold, what if these are crash prices? I want you to think about that for 1 second. I got to run away for literally 15 seconds. Talk to the bear. He's got the Pimbex box. I'll be right back. I'm coming right back. I'm coming right back. I'm coming right back. I'm coming. Whew, there it is. Sorry, guys. I'm coming back. I don't know what's wrong. I'm really hot in the basement. Let me turn up the fan. Okay. I apologize. Whew. I don't know. I just started getting really hot. What if right now we are in crash territory for silver and gold in nominal terms, right? we'd say, oh, well, gold's pretty high. Gold's near an all-time high. Silver, we know, right? Less than half, roughly half of its all-time high. But what if right now we are at crash levels? And from here, as everything unfolds, everything we talked about comes together. We have a confluence of factors that come together, that the price begins to realize where it should actually be. A lot of you, will say, right, silver should be at $40 an ounce. Gold should be at $3,200, $3,300 per ounce. Can you imagine, or can you accept the fact that possibly where we are right now is that situation, right? And don't forget, when things change, they could change very, very, very quickly. Very quickly. You know what? I'm going to open my package. I'm super excited. Coin Shop Chris does a ton for this channel. Neil does a ton for the channel. Mary does a ton for the channel. Susie does a ton for the channel. But Mary, out of the kindness of her heart, sent me a package. Let's open it up and see what's in there. This is a surprise to me. Oh boy. Oh man. Uh-oh. Oh, there's a nice note. Make sure I didn't forget anything. Okay. Oh wow. Oh, cool. The St. Louis Bicentennial. Wow. This is awesome. Let me show you this, guys. 33 millimeter, 1964. Oh man, thank you, Shadow Work. Thank you for the super chat. Look at that, guys. Mary, wow. Super appreciated. Never expected, but super, super appreciated. That is so cool. I'm going to read your note afterwards. Thank you, Mary Radcliffe, and thank you for everything that you do for the channel. Thanks for all you guys being here. I got more to talk about. This was another awesome piece of information provided to me from you that has everything to do about silver and gold. Again, okay, hold on here. Let me preface. Do you remember? Oh, Coin Shop Chris tells me to read the note. Okay, I got to read the note. I didn't know if it was something personal. Look at this cute little envelope Mary sent me. We're going to read Mary's note. Aw. That's cute. Look at that. Bumblebees. Wow. From Scott and Mary Radcliffe, just a little token of my appreciation for all you do. Not sure what the piece is made of, just hope you like it. Yes, I love it, Mary. I'm going to show you guys one more time. That's from Mary and Scott Radcliffe. And Chris, Coin Shop Chris, sent me a text that says he thinks it's silver, like 925 sterling. So, wow. That is really cool. And of course, I'm from St. Louis, and it has the arch on there. Man, these things really mean a lot. Thank you, Mary. Thank you. Thank you. John Exter's Pyramid. Who's John Exter? John Exter was a former economist at the Federal Reserve, and he wrote extensively during his life about how silver and gold were the real money, the base of all real money. Okay? This, though, my friends, is interesting because one of our viewers, Pam from Atlanta, sent me this today, a little find that she had. It's from a book. It's from a book called Economic Solutions. It's an old book. Okay. It was purchased. The price on it was $8.95. The back says here, Americans are being robbed of their wealth. I don't know if you can see that. That's the back cover of the book. Okay. But where it gets interesting is there's a note about the book from John Exter. Let me read to you what John Exter had to say. He said, Economic Solutions properly explains, I'm not saying this, John Exter is saying this. Economic Solutions properly explains why the Federal Reserve notes are IOU nothings. That's what it says. That's from John Exter, former Citibank president and Federal Reserve economist. Let me see if you can see which one it is there. It's the one on the bottom. It's right. There it is. Wow. Is that crazy or what? Thank you, Pam, for sending us that. Here, it says here at the bottom. I don't know what year this book was written in. I meant to look that up. It says, is America bankrupt? This was a long time ago. Is America on the verge of catastrophic economic collapse? Are we headed for another Great Depression? Will we have hyperinflation? Question mark. What can be done to properly prepare to protect your assets and your family? What kinds of investments will be able to withstand an economic meltdown? Can government and media glowing economic predictions be trusted? This was written a long time ago, guys, and we know in theory it's only gotten worse. How did the national debt get so huge? Oh my gosh. This was probably written in the 80s. Imagine if you would have told the author what the national debt is today. Wow. How did America become the most indebted nation in world history? This is about the author. Peter Kershaw, a respected legal and historical researcher, addresses these important issues, providing practical solutions to what he calls the greatest fraud ever perpetrated upon the American people, the Federal Reserve banking system. Interesting. Very, very interesting. But that was John Exter's whole point. And something that you likely know, and I know as well, right? The base of all the money, all the paper money, all the electronic money, right? We like to call that unicorn fart dust, jokingly. Nonetheless, the base of all of it, all the debt that's piled on top of that, all the derivatives that's piled on top of that, right? The base of it all is gold and silver. We know that. We believe that. That's the case, okay? Hey, let's get to 200 thumbs up, so I can ring the old cowbell. Please give it a thumbs up, guys. It really does help us get the word out to more and more people. Mary Radcliffe, thank you again for the awesome coin. That means so much to me. We got 200 thumbs up. Yeah! We're going to do it in surround sound. All right, guys, I got to check out. Thank you for being here. Keep up the good work. I'll be back tomorrow night, Sunday night, probably around 6:37 Central Time. Until then, be well, and I'll look forward to seeing you soon.